What's up, everybody? It's your girl Erica from the Classy Climb blog. I'm at undisclosed location in Maryland. Anyway, we're at a mastermind retreat. We've been getting a lot of great work done, a lot of great events planned. And you know, Terry just straight up bossed up last night, drop of a hat, and decided to come on into town. So I thought Terry could come on the show because you know what today is? Launch day for Zoom and launch day for Pinterest. Now, these two have been huge in the industry in creating work jobs, creating jobs, creating careers, creating businesses. But before we do all that, please tell the audience who you are.
Hey. Hey, y'all. So it's Terry Chioma, the founder of Invest with Terry, the school that teaches you how to invest and make regular income from the stock market. So excited to be here. You all know my story. I was able to quit my job and start trading full-time, trading stocks that is, and traveling the world. And now I'm here teaching you how to do that too, how to use the stock market to pursue your passions.
That's what I'm talking about. So listen, Terry's out here. It is beautiful, gorgeous, multiple layers. And you know, we got a great dinner happening here relatively soon. So we're not going to be here. We are. So already 60 of you guys on here. Hit the freaking like button. And stay. Thank you guys for participating. Already done so. And then we're going to get on to our topic today.
That's good.
Okay, so we've got someone from Alaska. What's up, Judy?
Hey,
New Orleans, Baltimore, Milwaukee, Chicago, Indianapolis, Philadelphia, DC, Long Island, New York.
Welcome, guys. Welcome.
Oklahoma City, South Central Los Angeles, San Juan, Puerto Rico, Boston, Massachusetts, Miami, Florida, Columbia, South Carolina, Baltimore, Riverdale, Georgia, Irving, Texas, but Chicago is home. Hey, if you're in Texas, you're in Texas.
Yes.
Decatur, Georgia, New Jersey, Maryland, Laurel, Maryland, I think that's what it is. Fort Lauderdale, Florida, Moore, Florida. Hello, beautiful people. Thank y'all for being up in here.
Welcome.
Hopefully the internet is good. But anyway, all right, you guys. So first things first. Terry, today 2 launches happened. Now, if you're not paying attention in the economy, Zoom and Pinterest have been game changers for people selling clothes, items, women businesses, the posting. Zoom has been a great way for people to have business meetings and all that good stuff. So today they launched, but some people are hesitant, right?
Yes. So today they had their IPO, which is an initial public offering. That's when they actually open up their companies for the public to start buying shares of their company. This allows them to build up more cash flow. This allows them to expand their company. So that's why a company would decide to go public, to start expanding. So today, both Zoom and Pinterest, as we said, went public. And just to give you guys a little teaser, so Pinterest actually gained $26 in a day going public. And then Zoom, or excuse me, I switched that up. Zoom gained $26 in a day, and then Pinterest gained $5 in a day. But the question is, did you miss out? Because so many people have been wondering, well, Terry, how do I get into these? They're called IPOs. The initial, how do I get into these IPOs? Am I missing out? Should I invest? We know that Lyft recently came out and they had an IPO. Uber is supposed to have one coming out soon. So I wanted to come on and talk with Ericka today just to make sure we educate you guys on what to do with these IPOs.
Right. And so there's a track record of last year that was really important that people were like, well, all these IPOs didn't do well, so why should I invest in these new ones? And I think that hurts companies because it scares off, you know, potential investors because of last year's performances. And you actually made some notes on last year's performances.
I did. So 4 really big IPOs that happened last year were DocuSign. It raised $629 million. Dropbox raised $756 million. ADT raised $1.5 billion. And then Spotify raised $9.2 billion. So those are 4 names that we know of and that also had really big IPOs last year, and I wanted to just use those as case studies to show us what happens with an IPO. And to your point of they didn't do so well, normally, guys, what happens with an IPO is it will jump up after the first day that it comes on public, and then the stock price falls. So you don't have to worry about missing out or being late to the game, because usually, and we're going to look at these case studies to give you some indicators, but usually the stock price will come back down and give you another entry point to get in. So do you want me to go through, maybe we can talk about these past ones and then we can decide based on this what to do with the new ones?
Yes, because I love people you're already in here talking about Uber's next, Spotify.
Yeah.
New Jersey folks are saying, okay, got you. I see what you're saying.
So let's talk about it. So if we were just to look at these 4 as a case study to see, well, what happens once a company does an IPO? Let's first start with DocuSign. DocuSign is the only one out of these 4. Let me just confirm and make sure. Okay, Spotify just barely made the cut recently, but DocuSign was the only one out of the 4 that was positive from their IPO date to the end of the year. And I say that because when DocuSign first opened their IPO, it was April 27th of 2018, so almost a year ago, they had their IPO. The stock price was $40.71. That's where it opened. Currently, DocuSign is at $53.10. So that's pretty good. That means you've made about $13 per share if you were to hold on to that stock from IPO.
Right.
So that's them, but let's look at the other 3. So Dropbox, it IPO'd also about a year ago at $22.93. Mm-hmm. It's currently trading at $21.25. So if you had jumped in like, oh my God, I really want to be part of Dropbox. I use Dropbox every day. Because you know what, here's a key that I just want to get across. Sometimes a company is a really great company and it has a ton of value for us as consumers, but that doesn't mean that its share and its stock is the best to trade, because now Dropbox is trading at $21.25. So you actually would have lost money if you held on to it all year. Does that make sense? So although it's a great company, the shares are actually losing value. Okay, so that's one. And then ADT, same thing. It came out an IPO January of 2018 at $7.73. Now it's valued at $6.65. So if you had held on to it for the whole year, you would actually be down now. So again, ADT, great company. We think of it for protecting us. Lots of people have it and use it on their homes. But at the same time, their stock wouldn't have been the best one to trade. Mm-hmm. And I'm telling you this just because now, as we see Pinterest and Zoom and Lyft, and of course, there's a big scandal with Lyft right now. Right. It came out at like $72. Now it's down to $50-something. So you've already lost $20 worth of value in just a couple weeks of trading. Right. So I'm saying this to say couple things, and I might be repeating myself, but y'all know sometimes I just want to emphasize. One, make sure that you learn how to understand the best stock price, not just go by a company that you like. What do I mean by that? There's great companies, like we've said, great companies, Dropbox, ADT, even Spotify for a little while. Spotify came out at $136 last year. Now it's currently trading at $139. So over a year of holding it, you've only made $3 per share. And like, what kind of growth is that? Like, not a lot of growth, not a lot of return so far on this year investment that you just made. And somebody's probably like, but Terry, you're an investor. Doesn't that look bad on investing in general? And the answer is no. That's why you have different types of investors. This is over a year, but I can trade in and out of the stock and make money on it on a regular basis. That's why I actually advocate for active investing and being in and out of the stocks more frequently, so that you're not sitting after a year only made $3, or you're not sitting after a year in Dropbox and down $1. Does that make sense? Right. So that would be my second key. Sometimes it's better to actively trade these stocks instead of just sitting on them for a year, because it's not a guarantee that after a year that the stock price will go up. Does that make sense? So that's another one.
Terry's gonna take over. I'm gonna go find a light switch. I was trying my hardest not to get up, but I'm like, there needs to be more light over here. Thank you.
Okay. Well, okay. I'm not looking at the questions right now, but I hope that makes sense. So we looked at 4 case studies of IPOs from last year. Now let's look at the yay lights.
There we go.
Look at the lights.
I was like, we need lights. I
Now-
can't get any light.
No, that's my note.
Yeah. That's all right.
Now though, I think we should start talking about what happened with the current IPOs since we
Mhm.
looked at the past ones. So we talked about Lyft. So right now, Lyft came out, I want to say a week ago. I travel so much, I get my dates sometimes mixed up. So, but very recently, Lyft came out. They opened around in the $70 range,
Mhm.
had a small pop up, and then the next day started drastically dropping. That's actually the trend that we see with most IPOs.
Mhm.
So that's why I don't encourage people to get in that first day. I want you to wait, look at how the stock is trading. And this is why learning to read charts is so important, because you can start looking at the stock price and you can get a trend of what's happening with that stock price and know a better place to enter, like a better price to enter the trade versus just jumping in and saying, oh, I think this is a good company. Let's just, hold it for a little while.
Right. But
Yeah.
people, the reason I'm bringing up this show is a lot of companies are paying employees in stocks. So, like, you may say, well, Ericka, what does it matter? Why should I worry about the IPO and the launch date? Because you may be some of those people who are working there. And how do they benefit? Like, how do they benefit? Can they sell? Is there like a lockup date? Do they have their money to hold on to? Or
So, great question. For many startup companies and technical companies, they do use some of their compensation in stock, or they issue stock as some of the compensation, or they'll give you equity in the company. If you have equity in the company before it goes public, usually that's a good thing because your shares are worth so much more after the stock becomes public. However, there is usually a lockup period, and that lockup period can range depending on company and depending on how the agreement was written. But many times it is a year or longer.
So I'm working, my boss says, here's some stock, and then the company's gonna go public. So I'm expecting probably some change at the office.
Yeah.
Right. And so I'm stuck holding it for what, a year?
Usually a year. There's a lockup period.
Okay.
But that can vary. But I wouldn't say quit your job tomorrow because you won't be able to sell the stock yet.
Hold on.
Yeah, there's a period before people are able to sell those stocks.
Because I remember them talking about the people who worked at Facebook or worked at Google and they got rich off the launch, which I think is important. Because if you're working at a company, they're like, hey, we're going to pay you in shares. Okay, how are those shares? Show me what the potential is.
Yeah.
So we'd like to thank Judy for the $10 super chat. She said, great info. Have to get back to work. We'll catch the replay. Thank you, ladies.
Thank you, Judy.
Thank you, Judy. Terry, people are like, Terry knows her stuff.
Thank you, guys. To the point, though, of being paid in shares. So even if your company has been around a little while, you may get paid in shares. And I wanted to just touch on that too. It doesn't necessarily just have to be an IPO. Like I have a friend and she has been paid in, I don't know if it's legal to talk about her company, but she's been paid in shares and her shares are vested every 3 months. So after she's been with the company for a certain amount of time, then those shares are vested. So one thing I think is really important for you, if you're getting paid in shares, I want you to know what the stock price is so that you know how much equity that's really worth. I also want you to be able to check on a regular basis what's happening to that stock price. So say, for example, and this is not the same woman, but say, for example, you have Walmart shares and Walmart goes up substantially after their earnings. Your equity is now worth a lot more. Like those shares are worth a lot more. You can sell some of those. If they're vested, you can sell those and turn them into cash in your portfolio instead of just holding on and letting them fall back down in value. So I just want you to always be mindful of how much is that stake, how much are those shares worth that the company is holding for me. You might also see that in your 401k. So if a company does a match and say you work for Coca-Cola and they also give you Coca-Cola shares, then I want you to also be mindful that there are times when Coca-Cola shares will be worth more than not. So you should be checking that as well.
So someone asked, can we show a chart? I would love to, but we're on this house internet, so I'm just trying to like keep the computer going well. Okay, so 1, 2, single parent network asks, if we don't want to get in on the first day it opens, how do you know which day that the IPO is going to have another interest invite?
Well, so I'm going to rephrase that question a little bit. And I'm going to break it down to just say, when do we know it's safe to get into the IPO? After it's been trading for a little while. And my answer is the best way to know is to learn how to read charts, because you'll be able to see when there's a change in price and where the banks are starting to buy it. And then you'll also, like, say the price spikes up and then all of a sudden stops going up, starts going back down, you'll see where the banks are starting to sell it. If you're able to check, like, learn how to read the chart, then you'll know how to get in and out of the stock. I think it usually takes about, I would give it a month to 3 months before you're able to see the data and get a real good idea of where to get into that stock, and potentially even longer. Does that answer the question?
I think so. I'm reviewing what they're saying. So it's like a daily monitor thing?
Yes, and one way to do that is to look at CNBC. Open a watch list in CNBC. CNBC is the financial network of the NBC family. You can go online to cnbc.com, or you can open an app on your cell phone, and they allow you to put in a watch list where you can, like, enter in companies that you're paying attention to and start watching their stock. I would put those companies that you're looking at into your watch list and just pay attention to them on a regular basis.
Good stuff. Somebody said, Darren White said, if someone doesn't want to look at charts, would you ladies recommend them just dollar cost average on Vanguard SP 500 index?
I would not. Like, every trader is different. So I will give that disclaimer. The way that I trade is for active income. So I want to make sure that the price that I'm entering into a stock or into a trade is the best place to enter. And I also want to make sure that it's protecting my risk on the downside and protecting my risk on the upside. The only way that I can calculate those, like my reward and my risk, is by looking at a chart. So for the way that I trade, and you said it was Darren that asked that. For the way that I trade, Darren, I honestly wouldn't do a trade without knowing how to look at their chart.
So yes, Apple Mac said Terry is correct. Learn how to read charts is key. Learn how to read support and resistance levels.
Yes.
Of course, someone said, what do you think of Robinhood app? We've talked about this a million times, but what do you think?
We have Robinhood's a great place to start because it has free fees and no fees. But because of what I just said with learning how to read charts, I think you need an app that has robust charting technology. Also, you need something that can give you multiple exit strategies. And sometimes Robinhood and other free brokers don't have that capability.
For sure. Let's see what else we got in here. On demand. Hey girls, great information. If you don't want to read charts, you just get a mutual fund because day trading is not for you.
Well, okay, let's talk about that a little bit. Let's talk about mutual funds, indexes, things like that. So a mutual fund is, for people that don't know, a mutual fund has several different companies inside of it, and it trades as one entity, right? That's actually very similar also to an ETF. An ETF has several companies inside of it, and it trades as one entity. The good thing, though, about an ETF is that you can trade it like a stock. So I can buy shares of an ETF. I can sell shares of an ETF. I actually encourage you to think about using ETFs that follow indexes. So what's an index? An index is the Dow Jones. It covers 30 of the top companies in the United States across different sectors. The S&P 500 covers about 500 companies across different sectors. So that's an index, and it kind of tells us overall how the market is doing. There are ETFs that track those indexes. So for example, there's an ETF called the DIA. That's the one that tracks the Dow Jones, those 30 top companies. There's also an ETF called the SPY. It tracks the S&P 500. you can buy shares of those ETFs if you're thinking about just following the market. So I would suggest, instead of doing a mutual fund, because mutual funds have quite a few fees, consider investing your money into ETFs that follow the market indexes. Does that make sense? I know there's a lot of information, but yeah, that would be how I would trade it if you didn't want to actually look at charts and you just kind of wanted to follow the market.
So they said, what do you think about Charles Schwab?
Charles Schwab's good. I like them. They've been very supportive of me as a trader in the past. I will say that they usually have higher fees than some other brokerages. So when you're going to them, you're usually going to them for them to manage your portfolio for you. If you're managing it yourself, their fees might be a little tougher or a little higher. Like their fees would be higher than an E-Trade, or higher than now Chase Bank is offering an investing platform and they give you free trades. Merrill Lynch, for Bank of America customers, is offering like 30 free trades. So you can use a different platform that's a little less expensive if you don't want them to just overall manage it.
Okay. So what's up, Charles Ogilvie?
Hey, how you doing?
Charles, where you at? You coming?
I'm coming. We here.
Terry just hopped
I'm
on
coming to LA next week, by the way. Check your DMs.
Terry be doing whatever Terry wants. Terry wrong.
I am.
All right. So Charles Ogilvie said, where have you been finding value or buying opportunities in this current record high stock market?
Great question. So let me give a little explanation for other people who don't understand. So right now we are at all-time highs in the S&P 500, the Dow, and the NASDAQ. So I just told you about those indexes that follow top companies. That means that a lot of the top companies in our US market are at all-time highs. So Charles is asking, well, what do you do when everything is at all-time highs? Because we know from history that when we're at all-time highs, that's when banks and hedge funds start selling stock and the market starts falling and stocks start falling. So we don't ever want to buy stocks at all-time highs. This is what I will say in this case. Actually, there's probably two big tips. Still look for quality companies that have had some bad news lately. So disclaimer, I'm not a broker. I'm not giving you guys financial advice, but I'll just give you an example. So we know that recently Boeing had the issue with their 737s, and several airlines have been grounding their planes. They had some new information recently, but their stock price took a big hit. It was at all-time highs probably like a month ago. Then after the news, their stock price took a big hit. I would still invest in some value companies like that have been, record has shown that they're really great companies, but they've just had some bad news recently. I would check that out. You guys could also look at the gaming industry. Take-Two, Activision, they've all had some really, they've had some news that has pulled their stock price down. So they're not following the trend of being at all-time highs, but they're still really solid companies. I look for some like that. Semiconductor sector, look at that. But yes,
she's talking, taking notes about semiconductors.
Right, NVIDIA, AMD. Again, I'm not recommending
this is suggestion. This is
if you wanted to know, what's Terry doing? Actually, you know what? I think that might be a good giveaway. The next time I'm gonna give away my watch list to anybody who signs up through you.
Okay.
So
I put Terry's class in the links because somebody said, will you be teaching a class on how to read charts?
Oh, I am. We actually just started one. Guys, it's been phenomenal. Like Monday, we had the newbies. Tuesday, we had the advanced students. I love teaching. I was in education for like 10 years, and it's still a passion, even though I have the freedom now not to have to do it. I still get joy from teaching people. So yeah, I do have a class. It's going on now. It's not too late to join. So click Ericka's link and you guys can get in. I did recordings of this week's calls. So you can go into the curriculum, catch up with us. Yeah.
So look at that. Tell me what that is.
Danielle
Garner. Listen, don't judge me. Don't judge me. Everybody on this show name get messed up. Okay. Danielle Gardner. I just got on. Are you buying Zoom or Pinterest? I use Zoom a lot at work.
I do too. But Danielle, what we mentioned earlier is that sometimes a company is a great company to use, but their stock price is not great. Zoom, now caveat. Let's talk about what happened with Zoom and Pinterest today.
Mhm.
So Zoom is one of a ton of tech companies, but it's very special in that it's actually profitable. So Zoom last year, I wrote it down, Zoom had 7.6, I want to say $1 million of profit. Okay, my notes are kind of scribbly. So just know Zoom was one of the few companies that was actually profitable last year. Because of that, I think it's a solid company to invest in, but I wouldn't invest here. For the reason we just talked about of not getting in when stocks are at all-time highs, it just went up $26 today to, it just started trading today. So today is its all-time high. So let's wait, let's see it come down, let's see where, let's get some data. Let's look at it trade for a little while longer, see how the stock performs, and then we'll be able to get into it. But I do think as a company, they're a solid company, and I'm really happy to see their profits. On the flip side, Pinterest. So Pinterest went up $5 today, but they've had a net loss of $63 million over the past years. I want to see them start getting some profits before I'm ready to invest in their company.
I almost feel like a lot of these companies are doing like tax reduction techniques where they're like, oh, we're in the loss, right? Google's been not making money for a year. Right. And it's like, y'all making money. Y'all running ads, y'all have staff. Some of it is, I don't want to be illogical and not follow numbers, but I definitely want to go, that company's making money.
So tell you the truth, they are making money. I think I saw somewhere, and don't quote me, guys, look this up for yourself, but I think they made like $770 million or so in ad revenue this year, because Pinterest makes money in ads. So they do have a way to make money, but they still had a net loss when you look at their expenses and what it costs them to run the company, and maybe if they're expanding. So yes, there's always that gray area. Money is coming in.
Money's coming in.
But we just have to say, but that's why Zoom is so special.
Right.
Because not only do they have money coming in, but they actually have a net profit. They're getting
so out of those two,
money.
Zoom you definitely would watch.
Yeah, it's one that I like. I'm gonna be watching out for it.
Okay.
Disclaimer, y'all don't be saying on here, Terry told me.
Terry did not tell you that.
I said I personally am watching it.
Okay. So how long do you watch a new IPO release before pulling the trigger?
So because I look at charts, I personally would like to see about 3 months worth of data. I want to see it bottom out. I want to see how far it can go down. I want to see how far it can go up. And then I'll feel comfortable pulling the trigger. And as a trader, I'm never worried about missing out. There's this FOMO with a lot of things, oh man, if I don't get in today, I'm going to miss out all that money I could have made. Never feel like that, because if they're public, now they're going to be trading for years to come. So whenever you get in, it's going to be the right time to get in. Okay? Don't have this fear of missing out and then you get in at the wrong price because you just, oh no, they're going up. Inevitably, anytime I have that feeling and I just try to jump in, that's when I get in at the highs and the stock starts falling against me.
Terry, someone asked, do you invest in penny stocks?
No.
I learned in college, you guys. We had a great professor taught, and he was like, I just showed it for example. I didn't mean for y'all to stay there.
Yeah.
I ended up losing $4,000, but I did make close to $12,000. So I can't really, I made it closer to 8, and then I lost 4, and I was like, oh my God, the sky is falling. But
so here's the thing. Everyone is going to advertise, especially in penny stocks, that one time that they made this big, huge gain. They're going to point at, oh man, Mark Cuban made all this money.
Mark Cuban.
Invested in this penny stock, and now he's a billionaire. But he hasn't told you all the times he lost investing in penny stocks. As a professional trader and as a teacher, I want to teach you how to invest with lower risk. You want higher returns, higher reward, and lower risk. so that you can stay in the game longer. If you keep taking these high risk trades, which is what a penny stock is, you usually you end up spending all your money or losing all your money before you start seeing those profits. But if you consistently take trades that have a low risk, you can stay in the game longer to see those rewards start compounding and making some true impact in your life.
Right. So, I mean, there's a lot on here, you guys. We're not going to be on here forever. We do have a dinner we're going to, but there's 162 of y'all in here. Thank you for being here.
Hello.
Thank you for hitting the like button. Let's see.
Can I make one more comment on the penny versus value? So I was trading a small account for my mom. She had like a retirement account. Somehow they let her roll it over into an IRA. And if you roll it from 401k to IRA, you can trade it yourself. So she let me trade it. She only had like $5,000 in there. It wasn't a big account. But then the question was, well, with $5,000, am I going to invest in stocks that are expensive, which is value companies, or am I going to invest in penny stocks? I chose expensive companies because they're more reliable and they move more in a day. So for example, I traded 3 shares of Amazon it had come down at the end of the year to $1,300. I traded 3 shares of Amazon. Since then, it's gone up $500 per share. Now we've made $1,500 in that account off of 3 shares of Amazon. That $1,500 is so much better than me having to invest in like 1,000 penny stocks that go down and now I don't have any more money. You know, like I'd rather.
So you're gonna invest Amazon for me? Okay, good to know. 3 shares. Call Terry.
3 shares.
No.
And
Terry like no.
Well, and when you think about that, like when you think about just the rate of return, like I'm not looking at my calculator right now, but what's 1,500 divided by 5,000? Like that's a huge return that we just made on her small account just from 3 shares of a value company. So that's why I advocate for well-known companies that stocks move well. That's why I advocate for those over risky, unreliable penny stocks.
Okay, cool. Someone said, Ray said, let me look in here. Ray said your teaching is one of the, let me get back to it, sorry. Ray Foster said her quality of teaching is one of the reasons I joined Terry's current class.
Thank you, Ray, and I'm so glad to have you in the course.
TJ said, hello, beautiful, intelligent people.
Hello.
Let's see. How much do you use technical indicators?
So there's only one indicator that I actually use. Trying to think if it's worth talking about. Sure, I'll tell you what it is, but come to me so I can tell you how I use it. But I use the exponential moving average, and I just use it as a double check. Like my strategy doesn't depend on it at all, but if I'm ever questioning whether I'm getting in at the right place, when I say getting in, it means taking a trade, like or entering a stock or buying a stock at a certain price. That's what I mean by getting in but whenever I'm questioning the price that I'm entering a stock, then I might double check it against the exponential moving average.
Okay, there's some more in here. Hey, come on by.
Hey.
Swing by. So you guys, as we're reminding you guys, we're at the retreat mastermind, and there's people everywhere, but yeah, they're trying to do their videos at the beautiful sunset. Sorry, I'm putting Terry's course in here multiple times.
Yeah.
I'm sending it to other people so they can put it in there. Thank you, everybody who's posting it.
We have 2 courses. So for those who don't know me well, I have a flagship course that I started called Trade and Travel, and it was to help people just get started in the stock market, but not just get started, but I wanted them to protect their risk on the downside. So I teach you how to protect yourself from losing money, and also to get into the trades at the right price. So we also I teach you how to read charts so that you can get in at the right price. And so by the end of that course, you are trading. Honestly, after there's 4 classes in that course: Intro to the Stock Market, Risk Management, Technical Analysis, and then some mastermind strategies. But after the first course, Intro to the Stock Market, I have you trading in a simulator. And then the other courses are just helping you build so you can become a really confident trader. So that's the Trade and Travel course. And I took some students through that course, and they still wanted, they wanted to keep going. They were so sad the course was ending that I decided to make the VIP program, where we talked about more advanced things. So we talk about shorting, how to make money when the stock market goes down, which perfect timing, guys. I really think it's important to learn how to short now so that when it starts happening, you can make some money.
And we'll do a whole nother video on that.
Yeah, we can.
What to do in the stock market in a recession.
Exactly. And then we talk about some other advanced charting techniques, like how do after hours trading affect your charts? You can benefit off of that. How do you capitalize off of gaps? So we talk through those things, and then we go over options in that VIP program. So there's two programs.
So Stacy Butner Gardner says, if I have $1,000, should I invest it all in one trade, or should I break it up? It's easy to keep track of. Okay, is it easy to keep track of multiple trades? How do you keep track?
So great question. Once you start trading, Stephanie, that was Stephanie? Stacy. Once you start trading, Stacy, depending on your platform, it will actually show you the trades that you're currently in. I encourage people to limit the number of trades to about 3 to 5 trades. That way you can really focus and make sure that you're getting, that you're managing the trades correctly. But in your portfolio, once you enter the trades, it will actually show you those trades, and you can keep track of how they're doing.
Awesome.
Yeah.
I like it. Thank you, Ericka Robertson, for the $2 super chat.
Thanks.
Stacy said, you two have definitely inspired me to get into investing. I want to do this since before raising my kids, and when Microsoft was just starting. Sadly, I let life get in the way. Thanks for the answer. What's the best platform for trading?
I really like TradeStation. That's the one that I have my students using, and I have some cool news coming out with them. Well, can I tell you?
Sure.
I just found out today. They are so excited about the work that we're doing the work that I'm doing with my students. They offered my students a discounted commission rate. So now they only pay 1 cent per share. And there's usually, for that trading plan, there's usually $150 monthly service fee. They're waiving the service fee.
Say that again. Repeat it all.
Okay.
Cherry students in her class.
Yes. You get to trade for just 1 cent a share on this really sophisticated, robust platform called TradeStation. Like, this is the type of platform where you can automate trades. You can set it up in the morning and then forget it the rest of the day. You can do so much with your charting. Like, this platform is amazing, but you can trade on it for just 1 cent per share. That's like 100 shares will cost you $1 to do that, to enter that trade, and $1 to actually it's amazing. And then the other cool thing is they said that even with just that $1, for every dollar that you trade or that you spend on fees, they're going to give you 20 cents back to go back towards the cost of my class. They're so excited about the work or the caliber of learning that you're getting in my class that they're actually paying you to take the class. So 20% of your commissions will go towards the cost of the class until you fully pay off the class with me. Isn't that so cool?
Okay.
So my students, I haven't even told my students that. So Ray, now that you heard it, if any of the other students are on live, you guys are getting a super cool discount with TradeStation. You'll hear about it real soon.
Man, thank you, Ericka Robinson, for the $3.99 super chat. Good information. Let's see where here is.
Yeah.
Cal Phillips said that's worth the class alone.
Right. Like real talk though. So if it's $150 a month to do that plan, just think 12 months. What's that you're saving? You're saving like 10 times 150 is 1,500. So that's $1,800 you save per year being in my class. That covers the cost of the class. You get it's cool.
It's a win, y'all.
It's a win.
Listen,
I'm so excited.
We'd love to be on here all day with y'all, but we cannot. Thank you for the 170. It's actually been over 300 people in and out of this whole live while we had it.
That's awesome.
So you guys are great. I love it. Some people are saying they got Pinterest today. That's awesome.
Okay.
Terry, is that $150 fee waived for access to level 2 on the platform?
I'm not quite sure. So on that one, it's waived no matter what if you're one of my students. So if you come through my class, then on the back end, they're gonna waive it for you.
Awesome.
Yeah, so sign in with Ericka. I think she put the link in the course, and then I give those names to TradeStation so that they can waive the fees.
So you ain't gonna be able to email TradeStation talking about Terry sent you, okay?
No.
They looking for it from Terry. So
Yeah.
you guys, you've been awesome today. Thank you for all the messages.
Yeah.
We have a ton of people here in the house today, but it is a beautiful house. We're gonna probably step out there on a live in a second. Everybody just from Charm City Buyers.
What's going on?
We had somebody go up the stairs.
Thank you, girl.
We're getting ready to go eat dinner.
I know, I'm hungry.
Thank you for all the people in the DM sending us restaurant recommendations. We appreciate that.
Oh, nice.
But they got the wrong city, so.
Yeah.
Y'all don't know. You don't even
Don't
know.
worry about it. Don't worry where we at.
Okay. So we learned some really great things about Zoom and Pinterest today.
Yeah.
So it was exciting. But you guys, Terry has a really awesome deal from TradeStation.
Yeah.
And that's worth her class alone. So
It really is.
So you guys
is.
definitely check that out. And everybody, let's wrap it up.
Yeah.
All right, you guys. Listen.
Oh wait. Check out the link for if you want to join the class. It's not too late. Also, if you want to find out more from me, I'm on Instagram at I'm an Investor. And I'm on Facebook at Invest with Terry, and my website is Invest with Terry.
There you go. Also, tell them who you are back here.
Oh yeah, I'm Charm City Buyers at Charm City Buyers all over the place, all of them.
All right, you guys. I'm Ericka Williams from the Classy Climb blog. We'll see you guys later.
Bye.